Welcome to Money Talk, the podcast where we delve into the exciting world of investment and explore how emerging technologies are reshaping strategies for the future. I'm your host, Candy, and today we have a dynamic panel of university students from IIUM to discuss the impact of artificial intelligence on investment strategies. Let's introduce our panelists. Joining us today, we have Izati,
Hello.
a computer science major with a passion for AI and machine learning. Farhin,
Hi.
an economics student interested in finance and quantitative analysis. Zatil,
Hello.
a physics major with a fascination for quantum mechanics and computing. And then, finally, Umaira,
Hello.
a mathematics student specializing in statistics and data analysis. Welcome, everyone. Before we start, let's bring the audience to the big picture of the way of investing traditionally. Previously, investing relied on gut feeling and historical data. But now, AI algorithms can analyze vast datasets, uncovering hidden patterns and relationships that humans might miss. This data-driven approach allows for more informed investment decisions.
Yeah, my father during his young age, he's the biggest fan of investing in land, commodities and other tangible assets. The reason is because investing in land it was seen as a safe way to store wealth. Not just that, he also invested in currency, where he used arbitrage, buying and selling currencies in different regions to profit from exchange rate differences. Therefore, it is clear that without the invention of AI, people can still make money from their investments.
Let's kick off our discussion with a question for Izati. As a computer science major, how do you see artificial intelligence impacting investment strategies, and what opportunities do they present for investors?
Thanks for the question, Candy. So, AI algorithms have the power to analyze the vast amounts of financial data, identify the patterns, and also make predictions in real time. For investors, this gives more informed decision making, automated trading strategies, and also the ability to capitalize on market opportunities with greater speed and accuracy.
I completely agree, Zati. As an economics student, I see AI as valuable tools for quantitative analysis and risk management in investment portfolios. These technologies can help investors better understand market dynamics and optimize asset allocation.
Absolutely, I also agree with what Farhan said just now. AI can continuously monitor and analyze market trends, identifying potential risks early on. This allows investors to take proactive steps to mitigate losses or adjust their portfolios accordingly.
Building on that, as a mathematics student, I believe that the integration of AI will enable investors to uncover hidden insights and identify non-linear relationships in financial data. By leveraging advanced statistical techniques, investors can gain a competitive edge and achieve superior returns in the market.
That's right. These powerful technologies are transforming how we invest. Izati, can you give an example of how AI is used in practical terms?
Sure. Have you heard about algorithmic trading? Anyone? Oh, for me, I never heard about that. Is it automated trading or like a black box trading? They use a computer program to place a trade, right? Yes. These algorithms can process information at lightning speed and also identifying fleeting market opportunities for high-frequency trading. Sounds like something out of a science fiction movie. But what about people who are not professional investors?
I think that's where robo-advisors come in, right? It creates and manages investment portfolios based on your risk tolerance and goals. They are a great way for beginners to get started without needing extensive financial knowledge.
Exactly. I totally agree with all of you. Now, moving on, let's delve deeper into the challenges associated with adopting these technologies in the investment landscape. Farhin, are there any ethical concerns with AI in finance? What do you think?
Absolutely. It's important to remember that AI is just a tool, not a crystal ball. I think that the transparency and explainability of AI models are critical. I would like to share the dark side of AI in finance. In 2018, Wells Fargo, a U.S. bank, was fined $1 billion by regulators for its unethical sales practices. The bank had used an AI algorithm in cross-sell products to customers, but the algorithm led to unethical practices such as opening accounts without customers' consent.
$1 billion? Oh, I never heard about that. Who are the regulators that find them?
Involves many regulators actually, but one of them is a Consumer Financial Protection Bureau.
I think the reason this happens is because there is a lack of regulation in the use of AI in finance by higher authority, which can lead to unethical practices and exploitation of consumers.
Exactly. From what you said just now, do you guys think that the government must quickly come out with a particular law and legislation about AI usage in the investment world?
Of course, because they have the power to do that to ensure safety and security. Actually, regulations can help to make sure AI is developed and used in a way that minimizes risk like biases and discrimination. This could include guidelines for data privacy and security so that the case of Wells Fargo will not happen again.
Creating clear guidelines and regulations for AI development and use of essential to address issues such as algorithmic bias, transparency, and data privacy to ensure that these technologies are used responsibly and ethically.
I agree, Umaira. In addition to that, investors must be mindful of the potential for unintended consequences and also systematic risk associated with the widespread adoption of these technologies. It is crucial to have a robust governance framework in place to mitigate these risks and also safeguard against adverse outcomes.
I also agree with what Izzati and Umaira said just now. The market is complex and unforeseen events can still happen. Additionally, human expertise is still crucial for tasks like setting realistic goals and understanding complex financial products.
That makes sense, Zatil. It means that the investors cannot heavily rely on the technology. It needs a collaborative approach in which AI can be used for the data analysis and humans for strategy and also oversight.
Do you guys think the laws and legislation will be accepted by the youth, especially to those that are the dominant user? You, Izzati, as a computer science student and know a lot about AI, how do you feel when there is a party that puts some restrictions and limitations to that?
Why are you attacking me, Farhin? But anyways, I don't think the youth agree since we emphasize on the spirit of freedom. This might lead to resistance to overly restrictive regulations that stifle innovation to some extent that the youth might prefer user-driven control mechanism over the government mandate for managing AI.
What about from the perspective of investors? What will happen to them?
To answer your question, I think the regulation somehow can give bureaucratic hurdles to the fellow investors, whereby the regulatory process itself can be slow, creating bureaucratic hurdles that slow down development and hinder investment.
Zatil, but I differ with your point of view. I think well-designed regulations wouldn't create bureaucratic hurdles, right? Actually, they would guide it. Just imagine a world where AI helps everyone regardless of background, make informed investment decisions. I think that's the future I want to see. So while limitations might seem restrictive at first, they could ultimately create a fairer, more secure playing field for everyone.
Well said everyone. It's clear that laws and regulations from the government play a crucial role in the adoption of emerging technologies in the investment world. As we wrap up our discussion, what advice would you give to the aspiring investors looking to navigate the rapidly evolving landscape of AI?
My advice would be to stay curious and continuously seek opportunities to learn and adapt to new technologies. Not just that, we should embrace interdisciplinary approaches and collaborate with experts from diverse fields to gain deeper insights and develop innovative investment strategies.
I couldn't agree more, Farhin. It is essential to cultivate a growth mindset and be open to experimenting with new tools and also methodologies. Don't be afraid to take calculated risks and explore unconventional ideas that have the potential to generate alpha and create value for your investors.
As for me, I think the investors should have a balanced approach in investing. For example, maybe they can combine the power of AI with human expertise, where they can utilize AI tools for data analysis, trend identification, and also portfolio diversification. AI can be a valuable asset, but it can't replace human expertise entirely.
Exactly, Zatil. My advice is that building a solid foundation in mathematics and statistics is key to mastering the complexities of modern investment strategies. Invest in your analytical skills and stay up to date with latest advancement in AI. By combining theoretical knowledge with practical experience, you can become a more confident and successful investor in digital age. Don't forget the importance of human judgment and intuition in investment decision making. While technology can increase our capabilities, it's ultimately up to us as investors to interpret data, assess risk, and make informed decisions based on our understanding of market fundamentals and economic trends. Trust your instincts and stay true to your investment philosophy, even in the face of uncertainty and volatility. Thank you all for your valuable insights and advice. It's been a pleasure discussing the future of investment with such a knowledgeable and passionate group of students. As we conclude today's episode of Money Talk, I encourage our listeners to continue exploring the exciting opportunities and challenges presented by emerging technologies in the world of finance. See you and happy investing.
Bye.
Thank you, everyone.
Thank you.